All right, I hit go live. We'll see when it pops up on the phone. Hey everyone, happy Friday. Welcome to Finance Friday. This is the show where we transform your relationship with your money by giving you the information you need to grow and protect your wealth. I am Amy Novakovich, CEO and certified financial planner at Nova Wealth Management. Follow me on Twitter at Novakovich Amy, or you can follow our company on Twitter at Nova Wealth Management. Oh, I have an echo. Sorry guys, hold on one second. I have to somehow mute that. It's going to drive me crazy. There we go. I also have been doing a lot more on Instagram. I'm like proud of myself that you guys need to go check it out at our Instagram channel. So go check that out. If you have any questions, you can always contact us through our website, novawealthmanagement.com. I also encourage you to share this out right now because, as you guys know, I love to do interviews, and today is a super awesome interview. I am so fortunate to have a good friend of mine, Jonathan Frost. Hey, Jonathan, thanks for being here.
Hey, Amy, thank you for having me. I really appreciate it.
Yeah, he's the CEO and founder of JD Frost & Company, and he is a man of many trades. He is an entrepreneur, business owner, father, of course, the CPA. So we'll get into the numbers, we'll get into taxes, but as far as all you business owners out there, this is the guy. I highly suggest to follow him on Instagram. Why don't you tell everybody where to follow you on social media real quick, Jonathan?
Yes, yeah, on Facebook, Jonathan Frost, and Instagram at jdfrost.today.
Nice. And I also want to encourage you because you do a way more like on social media. So I want to ask you some questions on that too,
Sure,
to help our business owners that listen.
Yeah.
But let's start with you just telling everybody kind of how you started your company, and I'll ask you too, like what was the biggest challenge that you had, but just tell a story, a little bit of background so people know, like, how you founded your company and why.
Yeah, I appreciate that. So yeah, I founded JD Frost & Company in 2012, and I was working for another CPA firm at the time, and just basically wanted to control my own destiny. I wanted to be an entrepreneur. And so I decided to go out and start my own firm. I had been servicing clients, doing all the work, and just didn't feel like I was going to get paid for it, much like I hear a lot of small business owners.
Oh, you hear that so much.
Right. Tell that same story. And so what I did is I went out and started a new firm, and I wanted to be different. Like, I didn't want to be the same firm that everybody else was. Like, I wanted to, have clients have better service and employees have a better experience. And really it was more focused on the employees and their experience with public accounting, because it's traditionally a job that you get burnt out during tax season. Like right now, today's March 15th, partnership deadline.
Right.
And so
and you're here with us, so thank you.
Yeah, and I'm here with you. Right. I mean, look at that.
But you're going to be working like all through the night and all weekend.
No, we're already in control. I've got an awesome team of about 40 people. But when I started the firm, those were my goals. Well, about 4 or 5 years later, I'm sitting there and I'm looking at the firm and what we provide and how we help clients and everything. And we're doing good work and growing rapidly. But it felt like that I just created another job for myself. It felt like that
something was missing.
Yeah, I looked just like every other firm. And I was like, what is going to distinguish us? And so, long story short, I went to this conference called GrowthCon. And at that conference, there was 10,000 people in an arena, entrepreneurs. And I'm looking at this.
That was crazy energy.
Oh, incredible. Were you there?
Yeah. Okay. Yeah. The one in Vegas? Talking about the one in Vegas.
That's right. So I'm sitting there and I'm like, how in the world are all these people going to understand what a CPA and a CPA firm really can do for them? Like, how am I going to translate and get on this level to where people understand it?
Well, because I felt like at GrowthCon, I felt like there's a lot of business owners that like, how do I say it? Like, have something to sell, like they have like a product, like something that they can physically sell, or do you know what I'm saying? And so I feel like our industry, and that's why we related very quickly, is because it's like yours is taxes, mine is more finance and planning. And so It's like, how do you like get so motivated and offer discounts and sell that? Like it was hard for me to understand.
Yeah, exactly. How do you package it? How do you make
Yeah.
the intangible tangible? And
Right.
also, like, around all these people, all these entrepreneurs, they know how to make money, but they don't see the value in what to do with that money once they have it. And so I wanted to figure out a way, how do we get out in front of this? And I realized that night when I was in Vegas, I've got to change. I've got to flip the game on this. And I listened to,
I love that moment. Like, I got to
yeah,
change. Do something.
right.
Yeah.
I went back to my room and totally revamped our whole business model. And we went to a fixed price model, and we started doing videos, and we were on social media, and now just putting ourselves out there, which accountants notoriously aren't like in the public, even though we're in the public, like we're not out in public. And so,
right.
You know, we're behind our desk doing our tax work, and we're these people that you have to talk to when you're talking about taxes and financials. And I don't want to talk about any of those things. And
you're the guy that they have to talk to, that they have to find out if they owe money. Like, it's just not super exciting.
It's not fun. It's not fun. And so I originally wanted to create a firm that was fun, that made accounting interesting, that was going to give a different experience. And so through going to that conference, through changing my mindset and having that awakening, I created this firm that is definitely different than every other firm in town.
Well, your firm does other things like outside of tax. So like some people joining, like you do real estate, like you do other totally. I mean,
yes,
like you're a jack of a lot of trades.
Yes, no doubt. And so naturally myself, I'm an entrepreneur. So I want to be the entrepreneur CPA. I want to have a business, a firm where entrepreneurs understand that we understand real estate. We know how to put a real estate deal together. We understand how to do financing for that real estate deal. We understand how to do club levels that we have, consulting, small business structuring, the best tax plan that you can have every year too.
Structure.
So
so let's talk about that for one. I don't mean to keep interrupting you, but like things interesting things, and I have to say it when I'm thinking about it.
Yeah.
So the business structure for a second. So a lot of, actually, this just came up for me yesterday in a meeting of how you should structure a business. You know, between the differences, like so many business owners when they get started will do like an LLC, but they really should be an S corp, or vice versa. Do an S corp, and they really should have been an LLC. Can you maybe go over for our listeners, like some people that might be starting a business, or just kind of give a really general, like when you should be a sole proprietor, when you should be an LLC, when you should be an S corp, when you should go to C corp? Because I think a lot of people watching really want to know that, and how do they know besides trying to Google it? But
so being a sole proprietor is when you're just starting out. You're just trying to see if this hobby of yours might be a business. And so I don't recommend going anywhere other than a sole proprietor if you're making $50,000 or less in income.
Got it.
There's no point in doing that. When you start making $50,000 or more in income, then you want to be a single member LLC. That's the easiest way to start your business. You can convert that LLC into being taxed as an S corp in the future. You can also welcome partners a lot easier if you decide to welcome partners. Those business owners that want to start out with partners, I would have an LLC to begin with, and that's what you need to start with. And the purpose of that is to, you never know when you get married to somebody, which that's when you start a partnership, you're married to that person, whether you
right.
And so it's easier to unwind a LLC or welcome new partners and have other partners be removed. But the taxation of all of those, the LLC, single member LLC, and sole proprietorship, ends up being about the same.
Right.
But those are kind of the order. Then when you are starting an existing bit, like let's say that you're a sole proprietor, you've done the LLC. When you're the sole owner and you know you're going to be the sole owner, I highly recommend going ahead and converting to an S corp. And the reason for that is business is very there's a lot of psychology to business, especially with taxes. So instead of paying estimated tax payments, you can pay you can pay yourself a salary as a S corp owner and have your tax payments made on each pay period that you
like a W-2 salary.
Yep, that's right. Yeah. So that's what I try to encourage. It really depends on the type of business, the volume of business that you're doing, and if you're going to be welcoming partners and having partners leave on a regular basis.
Got it. Very cool. So when you decided to do like these spin-offs, so at first you were a CPA firm, and then you're like, okay, well, I want to get into some real estate investments, and I want to get into some social media, and I want to do this. Like, so entrepreneurs that want to do other things, other businesses, I mean, how do you evaluate like a business opportunity? Like, let's give some insight to business owners. I know how I've talked about it. I know how I do it, but I want you to, you're super successful too. So I want you to say, like, how do you evaluate a business opportunity? How do you know when to move forward and when to say,
Well, I will tell you, when you're first starting in your business, focus on one business. And I'm speaking
Yeah.
from experience. Okay. I'm an entrepreneur. I'm a serial entrepreneur. I love new ideas. And so I've actually made some decisions. I have to admit, I've made some decisions that I probably should not have made, and I didn't evaluate them quite correctly. And that was in the first 2 years of being in business. Now, one of the businesses that I started was another tax service. Okay. So a tax service like H&R Block, where you walk in, get your tax return done, and walk out. Now that made sense for me because I'm already in the tax business, right? And I still have that business to this day. Now,
so would you call that, that's like tax processing? It's not the tax consulting. It's not business consulting. It's more just processing.
Yeah, it's called O'Brien Tax Service. We're the home of the $99 tax return. 99 bucks. That's it. So because I got tired of having to turn people away because we were too expensive. So I wanted to have another alternative
for people.
So that business makes sense. So business owners need to stay in your lane. Stay in your lane. If that other business opportunity has nothing to do with your business, like I would say for you, if you wanted to start a restaurant, bad idea. Like, don't go start a restaurant unless you partner with somebody who's started restaurants before and has run restaurants. So the other thing to keep in mind is when I got into real estate just here recently, I've partnered with somebody who has been in real estate for their whole career.
Who's been doing it. Yeah. So you partner with the experts, with the specialists.
So I'm not trying to do this on my own. And the other business that I started that I never should have, but it's cash flowing now, it's okay. But it's a hydration station. You know, I'm not a doctor. I'm not a nurse. I don't know anything about any of that. I just thought it would be.
So it just sounded interesting to you?
Yeah. It sounded interesting, and I'll admit, like, it's something that I should not have done, but it had nothing to do with any of my other businesses. So, I mean, rule number one, stay in your lane, only invest in businesses. If you're thinking about another flow of income, you know, everybody talks about these flows of income, look for multiple flows of income within your existing business. So
like branching out in your own business. Yeah, that's a great point. Because actually I was doing some business planning with a client that does boat repair. And just in the middle of conversation, I literally found, I'm like, you could buy and sell boats. You could charter boats. Like there was 5 or 6 streams of income within the one business. And he was like, oh, wow. Like, so that's what Jonathan mean, guys, like stay in your lane and find other, you know, other places that you can generate income, like within your own business.
Right. Yeah. And the reason that, so that's what I did in the first couple of years of business. What I found was it was better if I stayed focused on my main business, the CPA world. And then the last couple of years, what has happened is I've got clients who are interested in investing in real estate. I've got clients who are interested in social media. So now that we are experts in social media, we're experts in real estate because we've partnered with those experts. Now people are saying, hey, I want you to help me with my social media. I want you to help me with this real estate investment. And so that has allowed us the opportunity to have these other flows of income and gain these other experiences and have these other businesses.
So there you go. So there's a good segue to the social media piece. So like, obviously business owners today are using social media to grow like crazy. I mean, they're using all kinds of different platforms, but what are you seeing that works for your clients? You know, tell us some things that you see, like the platform that you think, or is there a different platform for different types of businesses? Or like, you know, tell us a little bit about what you're seeing with your clients.
Yeah, I think that there's a complete difference between the platforms as far as like the type of clients that you're looking for. But
yeah,
our clients in particular that we're working with, they're using Facebook, they're using Instagram, and it depends on the type of client that they have, where they're having the most success. So, I mean, I think that it's good to be on both platforms. I was just on another, on our webinar series that we have every week, with Julia Brooke, and she was saying, just pick one platform to begin with.
yeah,
And I think it depends on the demographic that you're trying to reach.
okay.
So if you're trying to reach an older demographic, I think you need to go to Facebook. If you're trying to reach a younger demographic, then Instagram is where it's at. That's where you need to be.
What would you say is older? Be careful.
I think older is anywhere from 35 and up. That's older.
Okay.
I think 35 and down. What did I disappoint you there?
Maybe.
Hey, I'm 35. I don't mind. But
yeah, we're the same age. So I mean, it's just a number, right?
it's totally a number. Actually, you need to embrace it. I wish I was 45 sometimes because.
Oh my gosh.
Yeah. Hey, more experience, you know.
Right.
But yeah, so I mean that's my opinion, obviously. But 35 and lower is Instagram, and I mean you're going to reach more people, I believe, on Instagram in a shorter period of time.
Okay.
But what business owners need to realize is this is not a sprint; it's a marathon with social media, and I think that you can run that marathon a lot faster if you're consistent with it.
Yeah.
Realize that it's this building and building and building of your brand every single day, rather than, oh, I'm on Instagram now, I should get 10 leads because of it. That's not the way. I've been doing it for a year now. You've been doing it for a while.
Yeah.
And I'm doing it like, I mean, I'm talking, I have a post every day. I do about 10 or 20 stories on Instagram a day. I mean,
oh my gosh. Like with tax stuff, so like your post, like you do, so taxes is your thing, right? So it's like, is that like sexy on social media? Like, oh yeah, taxes. Let's learn about taxes. You know?
Hey, we make it sexy. We make it sexy. Seriously, that's what I tell people. We can make it taxes sexy.
Well, this year with all the changes, actually, it is kind of, you know.
It is. Yep. It's a lot more interesting, but like, I'm not talking about taxes. I'm talking about what's going on in my office. I'm talking about what my clients are dealing with. Obviously not saying their names. I'm talking about my own personal journey of learning what it's like to be an entrepreneur, how to, you know, go purchase a building or go raise $1.5 million for a real estate fund. Like, learning how to do these things and capturing that and just telling people what you're doing during the day and how it might help them. You know, that's the main thing. When you're starting to produce this content, you've got to be talking about and thinking about the other person on the other side of this, these people that are watching us. You know, what value are you bringing to them? And so, you know, it's sharing your journey that really brings somebody value. I don't know about you, but I listen to a lot of people throughout the day, even though I'm delivering content, and it's all the same stuff. You know, we all know what we have to do, but we have to be reminded as human beings. And when we're reminded of these things, then we actually follow it up with some kind of an action.
Oh, that's so true. Like, that is human nature. Speaking of reminding, I should probably remind people who I'm interviewing. For those of you just joining, I have Jonathan Frost. He is CEO and founder of JD Frost & Company. He does all kinds of things, guys. He does taxes. He's in real estate. He's in social media. He's just a serial entrepreneur, and he is filling us in with a ton of knowledge. We've been all over the place, but definitely want to talk more about the real estate piece. So like you just said, something that a lot of people, well, they'll come to me when they want to raise the money. You know, they'll come to me and be like, if you know of any clients that want to be in this. So for you, that's a part of it though. You're trying to raise money. Yeah. Like when you go to raise money for something, you know, anybody out there that wants to raise money for maybe a new business opportunity, maybe they're retired and they want to just start something else up and they want to go like start a real estate fund, or they do want to get into real estate. If anybody that wants to raise money, you know, what would you say to them? What would you recommend to them? Like where to start?
You have to have a story to tell.
Mm.
So you have to have a convincing story. You have to have some way of communicating what you're doing rather than just give me money.
Yeah.
So what am I going to do for you, Mr. Investor, Mrs. Investor? What am I going to provide you? What value are you going to get? That's the story that you have to be able to tell. And so as well, like, you know, I don't know if it's my personality or the style that I have in raising money, but I mean, I try to make it fun for the person that I'm asking. I mean, hey, you got a spare $25,000 lying around. I mean, that's the way that I start. That's the way I started out, you know, and then I've got the story to tell. Okay, well, that was funny, Jonathan. Like, who does, you know? That's
yeah. Doesn't everybody?
But then I, you know, go in and tell the story of what we're trying to do and how we're trying to help you as the investor. And you know, so far that's worked.
That's been working.
And then the other part of raising money that you got to remember is every contact that you have is a sale. I mean, that's what Cardone preaches, right? Like every contact you have is a sale. So if you're the kind of person that's going to be trying to raise money, or if you're looking to raise money and you're not meeting about 20, 25 people a day, you're going to have a problem, because out of about 20 or 25 people you're asking, you might get 2 or 3 that are even just willing to look at the deal.
Yeah, that's so true. That's
so
what I find too.
So one thing that I practice all the time is getting to know other people and meeting new people and making a connection like you and I.
Yeah.
Where I've got the ability to at least send you a text and say, hey, I got a new deal. Do you have any other people that might be in mind? You know?
Right.
So I think, having the story to tell and then maximizing as many contacts as you have, and then being relentless in letting them know about the deal that you have. Don't take no as an answer the first time. I mean, and
like you're building relationships, like you're not just trying to pitch them something. Like over time, when you build relationships with your contacts, then you're more trying to look out for them and offer value.
That's right. That's exactly right. And one reason that I got into it is I kept having a number of clients go, hey, if you have any deals come across your desk,
I know.
I
get that too. Like, not everybody wants to invest in the market. Not everybody does.
Right.
And so they, or they already have enough money in the market and they're like, what else is out there? Okay, right. I've got the fixed safe stuff. I've got some of the gold, the currencies, the commodities. I've got some of the insurance. I've got some of the stocks. Now what else? And, it's like, there's so many different ways to invest in real estate too. So I just think it's interesting that you being a tax person, getting into real estate too, but there can be a lot of tax benefits in, real estate and benefits.
Well, there's tax benefits, but I mean, we're just not a tax firm. We're a growth firm. We are a connector of like-minded people. And so, I mean, one thing that I'm talking about right now is we're a connector of like-minded people, so that connection creates a synergy where 2 + 2 = 6. We want our connections with our clients not only just save them money with taxes. It's in order to help them grow as an individual and help their business grow. So real estate is a great way to grow. And if I can sit here and confidently tell you, hey, my next deal right now is a 7% preferred return. So you give me $100,000, 7% preferred return, and you get 70% of the deal. It ends up being a 12% cash on cash return. Do you have $100,000 lying around?
If you can guarantee it in writing.
Yeah, it's in writing. It's right there. Nothing's guaranteed, of course, but in our pro forma, we have it right there. And you're starting to get cash flow in Q1.
You're good. You're good.
Huh?
I said, you're good. Trying to close me right here on.
Hey, I mean, who would not like that deal? I mean, I'm not going to put that in a bank account.
Yeah.
I'm not going to earn that kind of money in a bank account. And I know that you're I know you're a wealth advisor, but like you said, you don't want to have all of your money just in the market.
No.
And so for those specific clients that are thinking about going out there and buying their next rental home, when I know, because I see everybody that owns 1 or 2 rental homes, and I apologize if for some reason, maybe I just have the clients that lose money in those, but nobody really makes money in them. They're a pain in the ass.
They're a pain.
It's
so they might make money, but it's gonna be a pain in the butt unless they get like I mean, you have to get so lucky with the tenant and the house.
And the house.
And the location. You have to get so lucky with everything.
Everything has to be in line. Now, if you own 40 or 50 rental homes, by all means, keep doing it. That's awesome. I'm a guy who had 200 rental homes. I mean, that's great. But if you're thinking about doing that, you got to have $30,000 or $40,000 in order to buy that rental home. If it's a decent home, why not just put $50,000 into our limited fund and get a 10% cash on cash return?
Well, it's much more diversified, and then you don't have to manage it. You know, I always say, like, obviously you have to know the risks and everything, because everything has its risks. And especially like some people say, well, I'd rather have it in my control versus passing it off. And it's like, to each their own. Like, it's not for everybody, that's for sure.
Exactly.
But just to know that, it exists.
But it's still having that story to tell and having as many people as you possibly can to be telling about that story.
Right.
And I think that's one thing that business owners, they get kind of stuck in their own lane, and they're just running their business, and they're like, well, I don't need to go meet that other person. Well, you never know when that connection might lead to something. So it's at least worth the phone call or the email or the chat on DM on Instagram.
No, we had a question, Ed. No, not liquid. Yeah. So he's asking, is your investment liquid? Your 7% return, is it liquid?
Yes. I mean, yes, you're getting a check every quarter.
So the liquidity is the income.
Yes. The cash flow off the deal.
Yes. Yeah. So we had some question coming in about that. Cash flow.
Like
liquidity of your principal, but it's real estate. Like, you wouldn't expect it to be liquid, but you're saying the cash flow is liquidity.
The cash flow is liquid. You're getting a check every quarter. Yep.
Cool.
That's the idea of it, because we have some other deals where we're doing brand new development. So we've got to build 82 rental, or actually 164 rental homes. So we're building the rental homes, and on that deal, there is no cash flow immediately because we don't have any rental homes yet. So on that deal, we're given a 2 times your money return within 3 to 5 years.
Okay.
But this deal that's open right now is actually trailer parks, and it's a deal where it's already cash flowing, and you're going to get a 7% return.
But not like a REIT where you can cash out.
Correct. You wouldn't be able to cash out your $100,000 investment unless we had a capital event, which would be a refinance, or we decide to, flip it.
Yeah, like a liquidity event. Yeah.
Yep.
Yeah. And I think like these real estate investments, like there's so many different ways to structure them too. And when you're talking about apartment buildings, there's actually a few ways that you can do that. But more importantly, what I wanted to say to you is they were just talking today about rental income. Rents are going up versus, even though home prices in general are just starting to decrease. They're plateauing. It's not like they're on the sharp decrease, but they've definitely seem to have hit their highs, versus rental income is still going up. So is that what you're seeing? The rental income's rising, and that's what you fully expect to see over the next couple of years?
Yeah, definitely. And I think, each different type of property ends up decreasing in value. You got your A, B, C, D type properties as well. So those rents will fall in regards to what type of property it ends up being. I mean, we're building an A type product, and what we believe, Oasis Residential is the name of our company. What we believe is that there's a new renter out there where they're going to be the 55 and older, wanting to downsize, get out of their home, but they still want to have a home that's a 1 or 2 bedroom with a patio, so they don't have to move into an apartment and have somebody living on either side of them. And we believe that those rents are going to continue to rise at a regular rate because of that need, that desire, that demand that's going to be created from this type of renter. So these type of communities that we're building are specifically 55 and older.
Oh, okay.
Yeah.
Oh, awesome. For those of you joining, I'm here with Jonathan Frost, owner and founder of JD Frost and Company. We are covering all different kinds. We've been all over the place. The one place we haven't been is taxes, though. So, like, before we wrap up, if you can believe it or not, we've already been doing this for 30 minutes. But so, and I didn't even say in the beginning, but I should definitely post this on my podcast. So we have the Nova Well Show is the podcast, and it's on iTunes and the Wooditch Network. So we'll be putting that on there as well, Jonathan. So we'll get it on the podcast in addition to Facebook. But let's talk about the tax rules. Let's talk about the taxes that you're seeing, the tax returns coming through that you're seeing. So what would you say some areas that people might not know about the tax rules that you're finding, like some findings coming up, like processing returns now, people are finding things like, oh, wow, this helped me or this didn't help me, or, what are some surprises that you're seeing with returns coming through for 2018?
Yeah, I think some surprises that we're seeing right now is those individuals that were expecting a big tax break, and they're not getting a big tax break. It's only about 1 or 2% that a reduction in their tax. And so that depends on obviously what type of income that you have flowing through,
for sure.
but it's not quite the impact of that we all thought. Now, for some companies, there is an impact on that because of this 20% deduction.
That's what I was just going to ask you about. Yeah.
Yeah. So the 20% deduction that you're getting, some people are getting surprised. They're like, oh man, I didn't even realize this was a thing. Thank you very much, government, for the free tax deduction. Others are going, man, I didn't do any planning. These are people that were picking up that we didn't get the opportunity to do planning for. And they're going, man, I didn't know this was an opportunity. And so,
yeah, they didn't know that was available, or that they had to meet certain criteria to get it, or whatever.
Yeah, the decision and the lack of planning is ended up costing them some money. It's not anything significantly huge, but anytime you can get a deduction, I mean, you need to be taking advantage of that deduction. And so that's the main things that we're seeing. I'm sure over the next month, as more individual returns are filed, you're going to see more individuals going, oh, whoa, like this is nothing, like this is no tax break, Would
you say the tax break is less or the tax refund is less?
Well, the amount of the refund that they possibly thought that they were going to be getting is less.
Yeah.
A lot of those that are getting the refund, it really wasn't a significant break in taxes. So I guess I'm kind of saying the same thing. But yeah, I mean that's what's going to end up happening. Individuals are not getting the miscellaneous itemized deductions that they thought that they would get, that they've gotten in all these other prior years. So if you're a W-2 and you've had a lot of unreimbursed business expenses that you've taken on your return, you don't get those anymore. Oh. So for some clients, that's a $30,000, $40,000, $50,000 deduction that they were getting before, which is, $8,000, $9,000, $10,000 worth of
tax. Yeah. So if you can, you need to try to structure it. If there's any way that you can structure it, instead of being a W-2 employee, be a 1099 subcontractor and have your own business and restructure your tax. So that's probably what you're doing with your clients, is trying to restructure their taxes.
That's exactly right. So, I mean, that's a lot of the things. That's the main things that we're seeing this tax so far.
Well, Jonathan, I mean, I don't want to keep you forever. Anything else that you think we haven't covered? I mean, you're definitely the growth company. We've hit a lot of different things, but any other thing that you want to leave our listeners with? I mean, business owners, retirees, they're all across the board, but any last thoughts that you want to throw out there?
I mean, the one thing I always want business owners and individuals to realize is that they're the CEO of their life. They're the CEO of their business, and they have the opportunity to change their financial freedom if they start to listen to professionals and really start to take action. So one thing I put on my podcast this past week was execution. And this is what I see lots of business owners fail at. Lots of business owners will write down their goals, but they fail to write down the actionable steps to reach those goals. So one thing I'd like to leave with everybody, if you're wanting to grow your company, you're wanting to grow your life, you're wanting to expand your mindset, write down your goals, but also write down the actionable steps. If I want to read 52 books this year,
how are you going to do it?
I need to read one book a week. And here's the book that I'm going to read this week.
So getting specific with the goals, not.
Like one thing that we help business owners do is take those actionable steps. Really, like people have called me a catalyst before.
Well, it's more strategic planning, right? Like that's strategy.
Yes, exactly. And you've got to have those actionable steps to be able to reach those goals. So that's what I would say, leaving people with is like, that's what I really enjoy doing, is saying, look, here's the plan. Now let's go do it. And then let's click off each one of those items. And, sometimes it involves taxes. Sometimes it just involves investments. Or
sometimes it just involves accountability. Like sometimes you're just there to hold people accountable.
That's right. And, accounting, it's accountability.
There you go.
It is, inherently. And so I think that's one thing that's kind of made us different over the last few years, and kind of what we understand about ourselves now. And now we're just pushing that out through social media and marketing.
Yeah, that's good.
Yeah.
Oh, thank you so much, Jonathan, for being here. I appreciate it. One more time, if you want to tell everybody, how to get a hold of you or where to find you.
Yeah. So jdfrost.today is my Instagram handle. That's the best way to follow me. I'm on there all the time. You get to learn a lot about my life. Facebook, Jonathan Frost. And then I would love to say, listen to my podcast, the Rainmaker series.
Nice. Well, thank you so much for being here, you guys. Thank you for joining us. If you have any questions, again, you can always reach out to us too, and we can get you in touch with Jonathan and his team, noblewealthmanagement.com. Happy Friday and have a great weekend. Thanks guys. Dave. You're welcome. Thanks for being here.